Welcome to the Silent Trading channel on Thursday the 9th of April. Today we will be going through the gold chart to see whether right now the price action is on the buy side or the sell side, right? So we'll be first going through the 4-hour time frame, but before we start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. Okay, so first we'll be going through the 4 hours chart, right, to see whether right now is the 4 hours chart telling us that it is going to the bullish direction or a bearish direction, right? So all we can see right now is there is a bearish price action on the chart on the 4-hour time frame, 4 hours chart. Where is that bearish price action? The bearish price action is over here, right? Previously, this bearish price action has been formed and even went down to validate this bearish price action, right? This candle right here even went down to complete this bearish price action, which makes it becomes a valid bearish price action. And after that, the chart went up to clear, right? Went up to clear off sell side volume while not attacking resistance before pulling back, and the next candle push up to form a top wick before pulling back and then dump, right? And then after dumping, it went into a sideway for a while, right? This sideway here for a while. And after going to a sideway, right now the chart is breaking above. Is this break above just to take out sell side volume before pushing downwards? Or is this break above is going to be a valid bullish price action? Right? Which one do you think it is? If you think it is going to be a valid bullish price action, at least comment a 1 for me. And if you think it is not going to be a valid bullish price action, it will in turn become bearish, comment 2 for me, right? This is a chart that is telling you that it is just pushing up only to taking out sell side volume, because sell side volume has been accumulated at both of this resistance over here, right? So this is what I'll call a fake out, or at least it will be a fake out at least until it push up far enough and then manage to break this resistance. Okay, so bearish and bullish price action are not determined by what you think, are not determined by what you think it should be or it is going to be. Because why? Because the market is always going against the side that has the most number of orders, most number of volume, right? So if the volume is on the buy side, the market will go against the buy side and dump. If most of the volume is on the sell side, the market is going to expand upwards, right? And continuously expanding. Because why? Price action is one thing to consider before you enter a trade, but most of all, the dump and the expansion of the chart also happen because of the volume on the market. If most of the traders are going to the buy side, right? If most of the traders are going long, the market is going to dump no matter the price action, right? If most traders are going to sell or short, the market is going to expand upwards continuously, expand above. Okay, so when you know that this is a problem with the chart, that the problem doesn't lie mainly in the price action, but also lies in mainly human psychology, because whatever human is thinking, whatever the people is thinking and trying to enter a position from their perspective, the market will then go against them no matter where they are doing it, no matter what they're doing it, right? So there are no such thing as the market has already moved high enough, it should reverse. The market has already moved low enough, it should reverse. Nope, there are no such thing as low enough and high enough to reverse, right? Because the problem with the chart is when most of the people think that market has pushed high enough and the market needs to reverse, right? Most of them are either going against the trend or they are waiting for the chart to reverse before they get their order. So most of the time, if the people are thinking that the chart has already expanded high enough, it should start reversing, and they start shorting on the chart, they start selling. This is where the market is going to keep expanding on them. The market will keep expanding above, right? And also the same logic, if the people thought that the market has already dipped enough for them to start buying, for them to start going onto a long position, the market will then continuously expand below, because the moment psychology is set into tricking people into entering a position, be it on the buy side or the sell side, that is the spot where the market, where the big money love it the most, because this is what they call easy money. This is what they call easy liquidity. Because if most of the people are thinking about buying, right? If the market has dipped quite a number, and most of the people are thinking of buying the dip, the market will stop trying to expand above and then start dipping again and again and again, right? So when you think about this, from another perspective, you should think about how are you going to be entering a position without being trapped. How will you be entering a position knowing that there will be nobody buying, there will be nobody selling? Because if everybody is buying, if everybody is selling, the market is going against that position of yours. Okay, so the best spot to enter is the spot when nobody is buying, when nobody is selling. Only then can the market start expanding. Or either the best spot to buy is when most of the people are selling. The best spot to sell is when most of the people are buying. That is the liquidity that the big money, the smart money are hunting, right? So we either wait for some price action, right? If we buy at a spot that nobody is buying and selling, sometimes the market won't go anywhere. But if we know that the market is starting to accumulate sell side volume, which means the market is going to start expanding above, we then start buying. But buy at where? We start buying at retracement after a price action has been revealed, after a price action has been confirmed, right? So right now, the main price action right now on the 4-hour time frame is on the sell side. It is a bearish price action, right? And this bearish price action is valid until this green candle or the next green candle is able to push up and break at least this resistance over here, because this resistance isn't strong enough to hold. This resistance isn't strong enough to control the direction of the trend, right? Only by breaking key level resistance can the direction of the trend be changed. Okay, so right now we need to wait for either this candle, the next candle, or the next two candles to break above and then break this resistance before we can conclude that the price action then is a bullish one, because a bullish price action must complete by at least one candle breaking key level resistance, right? So correct, this is a dip, but we do not know how deep could this dip, right? How deep is this dump going to be? It can still go down further, right, to take out more buy side volume before you'll start reversing, or at least it is right now tricking buyers into buying before you start dumping once more. Who knows, right? So before we buy, we never buy at the risky spot. We buy at the spot where we believe there are no buyers coming into the market. We buy at the spot that we believe sellers are being accumulated, sell side volumes are being accumulated. That is where we're gonna buy. And if sell side volume is being continuously accumulated, that is the best possible scenario that we want, because continuously accumulating sell side volume, which means there will be a concentrated accumulation of sell side volume at a few specific spot, and after accumulation is enough, the chart will then start expanding above, right? Or if it is accumulating buy side volume, and after an enough accumulation of buy side volume, the chart will then expand below, right? So we wait for the chart to reveal something, either by breaking resistance or either by breaking support, and then the next candle retracement is where we're gonna sell. But we're not gonna be selling blindly. We're gonna be selling based on price action, what the chart is doing, what the chart is showing us. If the chart is showing us that it is going to really reverse to the buy side, reverse to the bullish price action, we are not gonna be selling, right? So the best thing to do is to be able to understand. You do not need to read the chart too much. You just need to understand what the chart is doing. That is all that is needed for you to win this game. and not just to win this game but to win continuously, right? So for today, are we going to buy? Not yet, at least until this resistance is being broken, right? Are we going to sell? Also not yet, because we do not know if the chart is going to start expanding above again. So if we were to sell, we at least wait for this candle to break above, right? Break past resistance and forming a high wick, forming a higher wick, and after forming a higher wick where we start selling, and then we wait for the chart to retrace and then close our sell position. Okay, so right now we are not going to be entering any position until this candle breaks above, and we can sell at least one position and wait for the chart to retrace, right? And if you're going to buy, we wait for this resistance to be broken before we buy at the next retracement. Okay, so that is all I'm going to be analyzing here for you guys today. So be safe, right? Be safe, be disciplined, and always manage your portfolio in a way that you expect it to grow, right? If you expect it to grow, never do anything harming to your portfolio. Okay, never do anything damaging to your portfolio. Whatever that is good for it, do it. Whatever that is bad for it, whatever that is risky, and if that risk is not the risk that you're able to manage, never ever enter that position, because if your capability is not enough yet, you'll only be destroying yourself, you'll only be destroying your portfolio. So never ever do anything out of your capabilities, right? It doesn't mean that you should stop improving. You should always be improving, but you should never do anything that is more that you can handle. Okay, so that is all. I'm gonna be here for you guys for today. So I look forward to seeing you guys tomorrow. So for today, I'll see ya.